Wow, that's a great question. And what it is in the loss of confidence in the system and in the money system on a global basis. And so, yeah, you are seeing the spot prices surge. What's really interesting, particularly with silver, is if you go all the way back to the 80s, we are now concluding a major double cup formation, which frankly, I don't think I've ever seen before.
Gold is breaking record highs, silver is testing $50, and the Federal Reserve is out of moves. Lynette Zang says this isn't a normal market rally. It's the last gasp of a dying fiat system. Central banks are dumping dollars, hoarding metal, and even calling inflation healthy. That's not recovery. That's the death of confidence. And as the Meltup accelerates, precious metals may be the only real defense left against the collapse that's already underway.
It's crazy. You can look on the chart and see it's just this huge double cup from, I think, 81 or something like that until 2011 or 13, something like that. And now the next cup concluding. This is major. Once you see spot silver go above that $50, which it could be happening while we're talking right now, it's that close. But once you see that breakout, then technically I would expect a bigger surge in the spot silver price. I believe that we are in the melt-up phase of these markets where no matter what happens, you're just seeing surges. And you're seeing that in the stock markets as well as the crypto markets. And the interesting thing though right now, if you go back to the beginning of the year, what you actually see is that while everything is going up, the spot contracts on gold and silver, and particularly silver, are much stronger and more powerful than those prices that we're seeing in the stock market or even in the Bitcoin market, in the crypto markets. Gold and silver are handily outperforming. And that's telling us that what the central banks that have been accumulating more gold than they ever have since they began tracking, because they know what they're doing to destroy the currencies. And I saw this yesterday morning on Bloomberg now, where they were touting the devaluation trade. So that means that destroying the value of the currency, the purchasing power value of the currency, is now a good thing. It isn't a good thing. But the fact that they're touting that blows my mind, because they don't really want the public to understand that this inflation and this devaluation, it's really not necessary. But that's how far the markets have been degraded, and the currency markets have been degraded. And so this surge in both the spot prices on gold and silver is a huge indication of that. Well, if I'm right, and what time is going to tell, I'm either going to be right or wrong, but if I'm right, and if this is indeed the melt up part of this phase, then I will expect everything to continue to climb, because this is the end game for the fiat currencies. And the only tool that they have is, they want more debasement. And it really is an indication when they're talking about that as a good thing, a debasement trade. Are you kidding me? Oh my God. People don't realize how significant that is. But, the U.S. is now in a government shutdown. And there is even discussion as to whether or not the furloughed employees would be getting their back pay, and yet the stock markets are surging higher. Well, it certainly makes sense with all that uncertainty for the spot gold and silver markets to surge higher. But again, not the stock markets. That, of course, is because we are at the end of this currency's life cycle. And now the markets are believing it. I can't even stress how important Wall Street touting the devaluation trade is. That is so blatant so incredibly blatant. It's kind of mind blowing. I just got back from doing the Nomad Capitalist Live event, and it was a phenomenal event. And I talked about what I talk about with you, and I showed the charts and all of this. And this was not an audience that was familiar with me or my work at all. And afterwards, I was kind of mobbed, and the response was, I knew things didn't really feel right, but I couldn't connect the dots. And here you're showing me the charts from the Federal Reserve, and it makes so much sense. So people are starting to wake up, but at the same time, I can see the importance of having a plan C. Because I have a plan A here in Phoenix. I'm on an urban farm. I generate my own food and water and all of that. I have a plan B, which is 2 hours away, and I have a bug out location that's completely off grid and large enough to support a community. But I don't think a plan B is enough anymore. I think I'm looking, and that was one of the things that my takeaway from this event was to have an additional place to go with a second citizenship or third citizenship, because this is a global issue and it's going to get very, very, very nasty. And we have to be prepared for that. And I don't know. I mean, the world has never really gone through a global hyperinflationary event and reset before. It's gone through individuals, and it's going through it in a lot of places right now. But on a global basis, we went through a global depression in the 30s, and we didn't even have technology to spread it that quickly then. Now we do. And this, I think, is going to look like a wildfire, and it's going to catch a lot of people off guard. And, we traveled through Cambodia afterwards and speaking to a lot of local people and even going to the Money Museum, which was so interesting because you could see the central bank propaganda, right? And at one point, gold and silver was part of every country's money. It's just what you used to buy things. And people really, the normal person really has no clue. And like I was talking to a guide and I was talking about inflation. No, inflation's not that bad here, blah, blah, blah. I said, well, tell me something, because coconuts are quite big there, right? They use them a lot. I said, well, how much did that coconut used to cost you? And he goes, well, in 2019, that coconut cost 1,000 rupiah or whatever they use dollars there too, but whatever their currency is. And he goes, now they're 4,000 rupiah. I said, well, has the coconut changed? Are you using it any different than you did before? No. So what's changed? It's the purchasing power of this stuff that changes. Right? It's not the gold going up. I have a necklace that I've probably worn with you, and I bought it in 1987. And it's a gold necklace. And I remember at the time I paid $350 for it. And I recently had it appraised at like $6,500. Now, most people go, wow, and I even saw you look on your face like, wow, that's really good. But it's not the gold going up. It's the value of the dollar going down. And what that gold necklace did was it held my purchasing power intact. I mean, I'm not so sure that the Fed has ever truly, and actually I did a study on this, the Fed has never truly been completely independent, right?
Lynette Zang, chief market analyst at ITM Trading, warns that the world is sliding into a crisis of confidence no central bank can contain. After decades of artificial money creation, global markets now depend entirely on debt and devaluation. Even mainstream voices on Bloomberg openly praise the devaluation trade, as if destroying purchasing power were an investment strategy. To Zang, that's the loudest alarm yet. The architects of Fiat are admitting defeat. She highlights a stunning technical formation in silver, a double cup pattern stretching from the 1980s through 2011 and now completing its second leg. A decisive breakout above $50, she says, would ignite a new era of physical price discovery driven by shortage, not speculation. Silver inventories on COMEX and LBMA vaults are shrinking fast, lease rates are surging, and industrial demand from solar and EV manufacturing keeps setting new records. That's a setup for an explosive supply-demand imbalance the paper market can't suppress much longer. Gold has already confirmed the trend, punching through resistance to all-time highs, while equities wobble and crypto remains volatile. Central banks bought over 1,000 tons of gold last year, the largest accumulation in modern history, as they quietly reduce U.S. Treasury exposure. Zang calls it a vote of no confidence in fiat money. While Western investors chase AI stocks, sovereign nations are racing to anchor reserves in tangible metal. Meanwhile, the U.S. is drowning in record debt, gridlocked politics, and the constant threat of government shutdowns. Yet Wall Street still rallies, the classic melt-up phase that precedes a collapse. According to Zang, this is how every currency dies. First denial, then panic. When faith breaks, no policy or rate tweak can stop the chain reaction. At the Nomad Capitalist Live event, Zang showed audiences hard data straight from the Federal Reserve, proof that the inflation spiral was engineered to erase debt in real terms. Her conclusion: we're witnessing a transition toward a corporate-controlled digital money system, where governments and tech giants merge power through central bank-backed stablecoins. That, she warns, is the foundation of a surveillance economy, a financial grid where every transaction can be tracked or denied. She practices the resilience she preaches: self-sufficient living in Phoenix, an off-grid retreat, and plans for a second citizenship. Gold doesn't go up, she reminds us. The dollar goes down. Owning real money isn't speculation, it's survival. Lynette draws parallels between Nixon's 1971 pressure on Fed Chair Arthur Burns to cut rates before leaving the gold standard and today's political push on Jerome Powell. The Fed has never been truly independent. It's always served political ends. Now the bond market is rebelling, forcing long-term yields higher and exposing the Fed's loss of control. Once markets stop believing in policy, the game is over.
And there's such a parallel between when Nixon took us off the gold standard and Fed Chair, oh God, I had his name in my head and then it just Burns, and it went out, where he pressured Burns into lowering the interest rates. So there was more money in the system. When they drop the interest rates, that's inflationary. That is currency debasement. Because of re-election and different things that he wanted to do, and President Trump's pressuring Powell to do the same thing, which, okay, we got a quarter of a point, but really that's about currency debasement, and I see an awful lot of parallels there. I do question what's been happening since January is more of President Trump's people have become part of the FOMC, and there's more pressure for that. Even so are you ready for hyperinflation? Because that's the Fed's job, is to regulate the rate and speed of inflation. But they are absolutely losing control. And we talked about the markets and the Fed. Well, what are the markets doing? They're pushing the long rates up, right? So the markets, the bond vigilantes, right, are saying, nah, there's something squirrely here in the price of money, because that's what interest rates are, right? The interest rates are supposed to indicate the value of the money, and they're pushing them down. So the markets are stronger than the Fed. The Fed can control the overnight rate, but they can't control the market rates. And I think doesn't it look like we're in the middle of a battle royale? Well, there are a number of people that he wants to put in that position, and I'm certain that will happen. I think if he doesn't quite honestly, if you look at how blatant everything is, I don't even know if he did an outright firing that the stock market would still go up, because we're in the melt-up phase. And it's sort of like a ho-hum kind of thing. Do I really think the Federal Reserve is necessary? I do, until we go into this new system. If we can go back on some level of a gold standard, then we don't need him. But again, I think President Trump is a change agent. I believe that that is what his job is to change this system. And he's certainly doing it on so many levels. And it isn't even that, I mean, corporations have been in this since the beginning. It was corporate debt that was turned into Federal Reserve notes. You know, I mean, I have the hard evidence of that. I know it sounds outrageous, but it isn't. And now it's corporations that will be issuing the new money, the stable coins. And that's all digital. And that gets us into the surveillance economy. And who benefits from that? Anybody but the public. The public does not benefit from a full surveillance economy because that gives the government and the corporations the power to say, there's only one way to think, and it's how we want you to think. And if you do not think that way, then you are out of the system. That goes back to the importance of community with a foundation of sound money. You need your independence.
Lynette Zang's warning to investors couldn't be clearer. This is the endgame for Fiat. Own real money or lose your freedom to the new system. The reset isn't coming. It's already in motion. Central banks are preparing in ounces, not press releases. So ask yourself, if the dollar lost half its value overnight, would you still measure wealth in paper or in metal? Let me know in the comments. Do you think the Fed can regain control, or has the point of no return already passed? If you found this analysis valuable, hit like, subscribe, and share it with someone who still believes fiat money is forever. Because as Lynette Zang reminds us, gold and silver aren't investments, they're insurance for what comes after the collapse.